So let's dive right into the point. So first, we look at the economic calendar, and you can find that on our website here. You go to research, so you can see we have the market overview, market updates, our blog, calculators, and now the economic calendar. So you click on the economic calendar. So when you click on the economic calendar, it's going to bring you right away on our economic calendar. You can see how detailed the economic calendar is. So you can always uh, you know uh, change the dates to any week or any day you want to view. All right, you just click on this 23rd, 29th here, for example. Maybe when you come back next time, it's going to be showing you a different date. So you choose either the current week, previous week, next week. So what are we looking at? We're looking at what next week. Well, that is what we want to look at. What could happen next week in the financial market. And you know how we do it? We focus on the major economic data that could actually, drive the financial market. Not just in terms of driving the financial markets. When I mean driving the financial market, those who can cause those data that can cause a change in interest rate expectation, because this is actually what drives the financial market. I know people who this is their first time coming to this webinar is most likely going to be confused. They may be like, why is this guy showing us data? Show us the chart. We want to see the chart. Yes, definitely we are going to come to that. Okay. But as a trader, you always need to understand that what controls the financial market or what drives the financial market is economic data, geopolitics. When you have fundamental analysis, all right, this is actual, factors that drive the financial market. They are the fuel of the market. And when we say, fundamental, we don't just, we can see here we are trying to, explain in details. It's not just looking at a red folder or yellow folder or a white folder. The question should be, is this particular data important? Is it going to drive the financial market? What is the context in the financial market as of today? Are investors and central bank focusing on this data? That is what we always do in this webinar. Okay. So looking at that, on Monday, we relatively have not much of a high impact data, but we have consumer price expectations. All right, which is a good one. We can all use that to gauge what inflation is going to be in Europe, and with what is happening in the Middle East, which leads to higher leading to higher oil prices. We've seen crude oil prices are rising throughout the week. Brent was moving around $110. WTI was floating around $100 and 102. And with higher crude oil prices, this is inflationary, and central banks are watching this action. So we can look at consumer price expectation to know if inflation coming from the energy market or the energy shock from the Middle East is actually being moving into inflation data, especially in Europe, because Europe is heavily dependent on crude oil. So when crude oil prices are high, things become expensive in Europe from transportation. So meaning if you want to use flights, train, everything, if it's not electric, even if it's electric, because most of the grid is powered by gas, some nations. Okay, so it's affecting what everybody. So it's important to keep an eye on that. Consumer price expectation from the Euro area. And as we move on, Fed Chair Jerome Powell is going to be speaking. All right, the chairman of the Federal Reserve, which is the central bank in charge of the U.S. Dollar and the economy. So Tuesday, 31st March, by 12:30 a.m. Nigerian time, because everything you are seeing here is in my time, yeah, Nigerian time. We are going to be having the Tokyo CPI, okay, which is very important, all right, because this is definitely going to be a driver of, Bank of Japan interest rate expectation. So we see what they are going to be looking at, because they are also heavily affected by the war in the Middle East, all right. 70 to 80% of Japanese imported crude oil passes through the Strait of Hormuz. So definitely inflationary pressures are going to be affecting them. And let's see what if it has already started creeping in into their inflation figures. Okay. And we also have unemployment rate, which is also an important data. But the question is always what's the central bank? Because every central bank's first mandate is price stability for those who have a dual mandate or triple mandate. The mandate of every central bank is price stability, which is fighting against inflation, stable prices. Okay. So retail sales data for the Bank of Japan is also expected. So we'll see how those data is going to react, whether it's going to be inflationary for the Bank of Japan. So and we also have for New Zealand, okay, business confidence and doesn't have anything much to do in the market. Reason how it starts. When you maybe look at these data, maybe when you are trying to look at the equity markets, these data are more important. All right. So what we are looking at in terms of currencies are data that can actually cause a change in interest rate expectations. Okay. So that same Tuesday by 7 a.m. we'll have GDP quarter on quarter and year on year for the United Kingdom. Okay. So as we head on, we have core CPI, all right, for Euro. On Monday we have the expectation, and then we have the actual data. For like I said, it's very good we pay attention to this to see if the war in the Middle East is already creeping into the inflation figures. Like I explained, Europe is heavily dependent on crude oil, and if that is the case, we begin to expect a potential interest rate hike. Christine Lagarde, the governor and the president of the European Central Bank, have already said that. All right, her forward guidance is, a kind of we are going to hike. We are just waiting. All right, it's just hands on the trigger because they definitely know that it's going to affect their economy for sure. They know that the economy is very sensible to crude oil prices, so they know. So what we're just waiting is just data
Excuse
and
me,
cost.
man. That's plantain.
Okay.
Yeah, boiled egg.
So, sorry, who is Anthony Njoku? Please, can you mute yourself? Thank you.
Sorry, you. Hey.
So, and that same Tuesday we have GDP data month on month and year on year coming from Canada by 1:30 p.m. Nigerian time. And then we have J08 LTS job openings from the United States. And important, leading economic data, that gives us early signs about what unemployment rate is most likely going to be. But it's always good to listen to the central banks. Currently, no central bank is actually paying attention, or let me not say much attention, to the employment side. Or everybody is more focused on, inflationary pressures going to be coming from the war, in the Middle East. So, job openings is a very important data. The investors are going to be looking at it, but that is not the context or the focus at this point in time. Okay. So on the 1st of April, being Wednesday, we look at the data we are going to be having. Uh, uh, so it's always good as well to look at data from, for example, China. It's very important because economies are interconnected. When you study the Chinese economy, it tells you how, for example, Australian economy is most likely going to perform because these economies are interconnected. If Chinese economy is booming, Australian economy is going to be booming. Why? The reason why it's going to be booming because China buys most of these raw material, especially iron ore from Australia. Meaning, if China is not selling their products, that means nobody is demanding for Chinese yuan, because if you want to buy something in China, you must demand Chinese yuan. So it means if they are not selling, no need to buy raw material or commodities from Australia. It means no demand for Australian dollar as well. Okay, so you can see that the economies are what's interconnected. All right, so it's always good to look at that. And we have retail sales data year on year for the Swiss economy, and also with the manufacturing PMI from that. You don't actually just look at manufacturing PMI, you look at the details of the PMIs, all right, which is very important. You look at the employment side and in terms of the prices, which is inflation, not just the purchasing manager index. You look at it, in details, all right? It's very important to look at PMI data in detail. That is what actually drives the market, not just PMI. When you look at PMI, you look at, purchasing managers' employment and non, a kind of the producer side, that's the goods and then the services, non, the non-producer, that is those who offer services. We also look at their employment data coming from there, and also the inflationary pressure in terms of their prices. What do we mean by that? Let's say in Nigeria now, you look at people like Dangote, they are producers, all right? They are producing, physical goods we can see. So we look at how is employment going inside this sector and how is their prices rising or decreasing. That is what I mean. That's what we actually look at. And let's say we look at the services sector. Let's say we look at the banking, sector, the hospitality sector. Okay, how is Access Bank, UBA, Zenith, and all of them behaving? All right, how is the Go Hotel? All of them, how are they doing? We look at how are they really employing? Is the price of their services increasing? These are the real drivers of the economy when we want to look at PMIs, okay, not just the PMI data alone. So we have a retail sales data, on the Thursday as well. And IXM, like you can see, we look at IXM manufacturing employment, we want to look at employment and also in terms of prices, and also the non-manufacturing side, its employment and what its price. These are actual things that you look at, that not just the PMI. The PMI figure is just a combination of everything that has to do with PMI, but the Purchasing Managers Index. But what we are trying to look at is the context that concerns the mandate of the central bank, okay? Which is, for example, the Fed, that is prices and what employment. That's what matters to us, okay? So on Thursday, 2nd April, we have CPI from Switzerland and initial jobless claims from the United States. And on Friday is going to be a holiday, for those who are Christians. Just a few days ago, we finished the holiday of our Muslim brothers and sisters. And now, next week, Friday, is going to be a holiday for our Christian brothers and sisters as well. Okay? And, I explained the relationship between, for example, Chinese economy and Australian economy. You may not actually be trading the Chinese one. You can if you want, but it's always good to look at these economies because they are interconnected as well. Okay, and because Friday, 2nd April is going to be 3rd April, sorry, is going to be the first Friday of the month. So that's when we're going to be having the almighty unemployment rate and non-farm payroll. Okay, and that is it for our economic calendar. Okay, now we know how we do it. Next, we go on to our macroeconomic analysis, and we know how this is done. And how do we do it? Remember, what I do here is I select the first 3 currencies against the last 3 currencies, all right? And we start with the first one. So we are going to be looking at USD CAD. USD CAD has been bullish. Some of the currency pairs have been taking advantage of, which I've also been sharing with you guys if you watch our previous if you are here with our previous webinars. And you can see how USD CAD has been behaving. It's been pushing to the upside. And we don't just look at data, we also look at sentiments. We try to confirm what institutional traders are doing, big banks, leverage funds. What are the actions as well? Are they backing up what we are doing, or maybe moving into the new week? So moving into the new week, last week was heavy in terms of their bullish bias from negative 28 to 102, and now we are down to 4. Okay, so it means probably they are cutting their positions, and I expect the reason why that could be. I think not in terms of their bias, being bullish on the dollar, but I think their bias is coming from the side of taking profit. You need to understand that when institutions are doing maybe what I call reallocation of portfolios, or maybe taking profit, these are some details you can see in order for you can see them just technically or in a naked chart like this. Something you see when you understand fundamentals, commitment of traders. Yeah, technically when you understand structure a bit, and but you really need to have some good level of information to understand that we are just probably going to have let's say a pullback, profit taking, and what we're expecting in that profit taking is just a structure similar to this. This is what I'm anticipating. So if we have any corrective structure, which most likely is going to take almost every 3 to 4 days during the trading week, if that is what we are going to be getting, right? That's what I'm anticipating. Another up move will be coming up again, okay? So I'm looking at this because majorly running a statistical analysis of this trend here. This trend is not yet coming to an end. The momentum and the volume is not dying. It's still very bullish, which is supportive of macro and fundamental data. So for USD CAD, what I'm anticipating is a corrective structure upside again, similar to what we have seen here. Okay, that's what I'm anticipating for USD CAD. So let's continue. So the next one we have on our watch list is USD Swiss. Okay, USD Swiss, have also been looking at USD Swiss in the last 2 weeks or so. So in terms of sentiment, what I would say in terms of sentiment. So for USD Swiss, we went from we've been pushing to the upside from -18 to -0. You can see pushing up to +38, and now we are just at +9. So this for me, yeah, is a sort of a decline, but not just really a decline. This is kind of maybe we'll be expecting a pullback because macro geopolitical data is how do I put it? In favor of what we are actually anticipating. So we are most likely going to see, a kind of a corrective structure similar to the one we have seen here. This kind of a move, or maybe this kind of a move, is what we are actually going to be seeing, in USD, Swiss franc. That's the kind of move we are going to be seeing. All right, this kind of a move, and then upside again. So if you know how to take advantage of this move, yeah, you can as well. That is what we call counter trade trading. If you know how to do that, you can definitely take advantage of that. But if you don't know how to do that, it's always good to follow the fundamental direction. For example, you can take advantage of this, pullbacks here if you know how to. But if you don't, you be patient to, when they are done, and then follow the fundamental direction and push, to that fundamental direction. Okay. So that is for USD Swiss franc. The next one we have is GBP USD. GBP USD. So we also look at sentiment and what can we see from sentiment. So we went from -19 to -38, which you can see, GBP USD has been heavily bearish, all right? And now we are at a +8. Is it really what do I call it? A reversal? No, I don't think so. I think this is just maybe maybe you're going to be having just a technical pullback. You can see GPU has been pushing to the downside. And what are we anticipating? Now, what I'm anticipating for GPU is a continuation to the downside. All right, maybe we can just have a pullback, but I don't expect it to be a very long one. Though this structure is gradually coming to an end, I expect something of this nature downside again. Something similar to what happened here, what I'm anticipating. Let me go to the 1 hour time frame. That's where you are going to clearly see, the technical structure. Okay. So here I got what we call a running flat in web analysis. Here we got a push to the downside up, corrective structure here, price pushing to the downside. So if I get any structure, similar to this structure, both in time and in price, I'm going to be looking for, a continuation to the downside, taking away all these lows. Let's go back to the 4 hours. Okay, which these lows are probably going to be taken. So I'm going to be looking at price taking away, all these lows. Okay, most likely the price is going to take away all these lows on GBP first. Okay. So let's go back to our Excel sheet. And the next one we have Euro. Now we look at Euro CAD. So Euro CAD is one I've been paying attention to for the past few weeks. And if we look at that in terms of sentiment, what are we saying in Euro CAD? Euro CAD, we went from -38, to +12, and now we are just -1. So this is most likely just a pullback happening. The euro is recovering since we began to hear some sort of extension in the war, and extension and the pause in terms of the strikes all right, in the war in the Middle East, which is giving some sort of recovery and hope, all right, and maybe we're going to have a solution to the reopening of the Strait of Hormuz. But talk is cheap. The market is actually on the brink, waiting for actions, not just talks. Today, reading the news, which we are going to look at geopolitics. It's the escalation is increasing. Today, the Houthis in Yemen fired some rockets into southern Israel. And some of the northern part of Israel as well. And this is another front, in the regional war. So, and this is something we don't want. We want this thing to de-escalate and not escalate further. And with this, that's the move we are seeing in the Eurocard is most likely going to be short-lived. Okay, but for now, we'll see how US and Israel response to that. So what I'm anticipating on US Eurocard. So what I'm anticipating on Eurocard is you push the downside here to complete this corrective structure to giving me something similar to what we have seen here, upside again. That's what I'm looking at for on Eurocard. Okay. Okay. Okay, guys. Please, guys, just give me a minute. Okay. Let me just get something to eat. Okay. Let's continue, guys. So we just discussed Eurocard. So the next one on my watch list, I'm going to be looking at Euro Swiss. Okay, Euro Swiss, Euro Swiss. So when we look at the sentiment, Euro Swiss. So we look at this, we can see from negative 51, we are gradually pushing to the upside, which this has been happening. I wasn't paying much attention to euros, but these are two Europe, no two currencies from Europe. They are both affected. So, but euro is meant to kind of perform better because in terms of monetary policy expectation, we are more hawkish compared to that of Swiss. And then with the a little bit of hope of the reopening of the Strait of Hormuz, this is why we are seeing some sort of recovery on euro Swiss. So for Euro Swiss, I'm not paying much attention to it, but any sort of a corrective structure, something similar to what we have seen here, we could see Euro Swiss extend maybe to about 50, 70, or even up to 100 pips to the upside. That is for Euro Swiss, okay? So the next one here on my watch list we look at is Euro GBP. Okay, and when oil prices are high because of maybe any kind of escalation or tension, GBP also suffers because UK is also dependent on oil, but Europe suffers more. All right, the euro currency suffers more, but now we're having some kind of recovery. Euro GBP is expected to continue pushing to the upside. Because in terms of that recovery and also in terms of rate expectation, we can see where Euro is sitting and where GBP is currently sitting. So for Euro GBP, we're expecting price to push it upside. So if we look at sentiments and see what price is doing, we can see price is coming from to negative 51 and now to negative 15. That is a reduction in the negative side. It's pushing up, right, in terms of institutional positions. And if we look at that on the chart, and see how that has been reflecting on the market on the price chart, you will see that we can see we are gradually seeing that push to the upside on Euro GBP. So what I'm anticipating on Euro GBP, this has given me the first impulse but not structure. Here is a potential corrective structure forming from. So any push to the downside, I'm going to be looking for a move to the upside. And this a move that's going to be taken away this side. That is probably going to be giving me 100 to 150 pips to the upside. So after you push the downside, completing this corrective structure, I'm most likely going to be looking for an opportunity to the upside, taking away this high. So if any move comes to the upside, maybe slightly taking away this high, I want to see push the downside first. Then after that, I'm going to be going for an up move on Euro GBP. That is my own analysis on Euro GBP, guys. Okay. So next we look at the AUD. All right. The AUD has bought so much, and we are gradually beginning to see some profit taking, or maybe institutions are beginning to take not just profit taking, but when something has bought so much, it's now most likely that market is having a top. All right, so maybe when something has sold too much, maybe we begin to see some signs of capitulation. The market is maybe gradually forming a bottom. So this is most likely what I'm beginning to see in AUD. But I want more data to come. The last time the Reserve Bank of Australia increased interest rates, and this tension is definitely going to affect every economy. It's global economy, not just some people, but it's hitting some people more, especially people from Asia is hitting them more because they are heavily dependent on crude oil. So we see how AUD data, their upcoming data comes out, and we'll see how it's going to be. So the first one I'm going to be having for AUD is an AUD card. So if we look at AUD card, we can see exactly what I'm saying. From 64, we are at 9. So I'm not going to be heavily long on AUD. I would rather focus on other pairs and focusing on much on AUD card, because AUD card seems to be giving a correct structure to the downside. This structure for me is still in the making. I will allow price to finish with this structure. So when price is done with the current market structure, I'm going to be looking out for what could be my next opportunity, because what I'm anticipating now on the AUD card is that we could, after this structure here, correction here is completed, we could have an up move, something similar to this, and then downside again. So this is most likely going to be a very complex structure, which I don't want to, how do I put it? Begin to look at. I want to allow some waves to unfold, and also some incoming data to come, so that we see a very clear direction of the AUD card. So I rather pay much attention to other pairs than on AUD card for now. And these are two currencies that are actually benefiting from this tension. Canada is a very big exporter of crude oil. So when crude oil prices are high, Canadian dollar performs well, and also Australia is around the third largest exporter of LNG. All right, I mean natural gas production facilities in the Middle East are also affected, especially in Qatar. And when LNG prices are high, Australian dollar also performs very good. This is the reason why AUD has been pushing to the upside, because some traders will be like, "But it's a risky currency. Why is it pushing when there is uncertainty in the world?" That is why I tell traders, context matters. If you understand context, that is the point you have to understand fundamental analysis or maybe geopolitical analysis, because context is the most important thing, right? Not because there is an uncertainty, but what is causing the uncertainty? What is the uncertainty affecting? Okay, that is the question you need to ask. So if the uncertainty is affecting something, definitely somebody is going to be benefiting from that same uncertainty. That is how the world works. So it's context. Context matters, not just the headline, but context. All right. So that is it for AUD card. So the next one on my watch list I'm having is AUD Swiss franc. A similar thing I have for AUD card as well. So AUD Swiss franc, if we look at sentiments, we can see from 0 we are now up to 14. Which is more bullish and more better than the AUD card, because of Swiss franc is suffering a bit from the global tension that is happening coming from the Middle East, heavily dependent on crude oil prices. So what am I anticipating for AUD Swiss? So for AUD Swiss, any push to the upside, downside again, we analyze that wave, and maybe we begin to look for opportunities back to the upside. But for now, this corrective structure is still not done. So we're probably going to see more waves to the downside. So Maybe if you want to counter trade it, you can definitely look at it. But for me personally, I'm going to be waiting for more waves, to occur here before I will look at, AUD switch again. Here we can see impulse correction, impulse the correction again, the last wave now impulse. This wave is extended. So any corrective structure here, probably an expanding flat. Most likely, we are going to see a downside again. So I'm going to be allowing, this move to be done, and when market gives me the buying opportunities again, I'm going to be jumping into it for AUD Swiss franc. Okay. So the last one I have is I paired, like I told you guys, I paired the first three against the last three. So the last one I have on my watch list is AUD and GBP, which gives me GBP AUD. Okay. So if I look at sentiments for GBP AUD, so where is GBP AUD? So we can see from we are coming from negative 30, negative 11, negative 0, and then now at positive 3. So we are gradually seeing a kind of maybe a corrective structure in favor of the GBP, but that for me personally doesn't mean a total reversal. That's why I'm telling you I'm being very careful with AUD. It could be a top forming in AUD, all right, especially when you're looking at the currency index. You can always watch that from I use a particular resource, Mataf, where you can always analyze the individual currency index. Okay, I always look at that. So you can visit www.mataf.net. That will help you, for that. So that's why I'm being very careful with, the AUD, because this could be a top forming on the AUD. Okay, so when you go there, you go to Forex, you go to trading tools, and then you go to currency index. So it gives you a list of current, I see a lot of currencies: EU, Euro, USD, Pound, Swiss, Yen, CAD, Aussie, New Zealand, Chinese Yuan, Danish krone, Egyptian peso, Norwegian krone, Polish zloty, Swedish krona, Singapore dollar, South Africa rand, Turkish lira, and then gold, silver, and I think this could be aluminum also. So that is it. Okay. So GPAUD we are talking about. So let's look at GPAUD and see what the market is actually doing. So we are beginning to see that is being reflected on what we can say in terms of what institutions are doing, which that could be some sort of profit taking. Let's see how GPAUD, you can see I've sold for a long time. So we'll try to understand what is actually happening here. Most likely we get a corrective structure similar to what we have seen here. Maybe that could be what is playing out. So meaning when this up move is done, maybe we get a small back upside again. Now I'm going to be looking at the corrective structure that's most likely going to be forming maybe before the next up move again. Maybe this pullback and corrective structure is actually what we are looking at. But fundamentals direction still remain the same. For the fact data is not saying otherwise. All right, I'm still bullish AUD against pound. But structurally, and what we can see in sentiment, that seems to be giving us a pullback and profit taken from these very big sales we have seen here previously. Okay, so that is all we have for this week. Okay, on the currency pairs. So let's look at geopolitics. But before we look at geopolitics, do we have any question? Please, if you have any question, please you can unmute yourself and ask your question. Okay. Hello, guys. Hello.
Good evening.
Yeah, good evening, brother. Good evening, Kenechukwu. Okay. Yeah.
Yeah. So earlier this week, I was monitoring the gold and Bitcoin, and
Okay.
beginning of this week, gold, which is a safe haven currency, started dropping. So I wanted to
Okay.
know why gold was dropping and Bitcoin was also increasing. Then towards the ending, the thing now reversed.
Okay. Very good. Now, let's first of all look at gold. That's why I told you guys understanding of fundamentals is very important. I wish, like, I want retail traders to begin to learn and understand fundamentals because it's very important. Technicals is important, fundamentals is important, but you have to marry the two. Using one just means trading blind. That I'm emphasizing on fundamental doesn't mean you use only fundamental. Sometimes I hear people make a statement, I'm a fundamental trader or I'm a technical trader. That's my own opinion. Personally, to me, it makes no sense to me. Okay, both of them are very important. You need to marry the both. Technical is important for you to time your entry. Fundamental gives you bias and context. They are both important. Now moving to gold, where gold is falling. Yes, correct that gold is a safe haven asset. But now, remember, this is XAU against USD. Context matters, like I said. Now, when you look at what is happening, there is a war in the Middle East, right? Gold is a safe haven asset. So is dollar a safe haven asset. All right. So both of them are safe haven at this point. So it means flows are probably going to moving into the two. Now that is 1-1 cancelled. Safe haven, safe haven. But there are other factors. What is the other factor? The second factor. Crude oil prices are high. The United States of America produces crude oil. Is a very big crude oil producer and exporter. I mean, when crude oil prices are high, the US oil companies, are going to make more money, and probably the government is most likely going to be charging them more tax. So the US economy is making money. All right, and this is going to be adding to inflationary pressures, which is going to probably make the central bank begin to think of hiking interest rate. The Fed is already discussing it. Probably not majorly because of the war in Middle East, but the one they are talking about currently is because of probably coming from goods inflation, goods inflation, coming from Donald Trump tariffs. All right, and now the Middle East tension is coming, which is going to be inflationary. Gas prices in America is more than $5, and you can see. So this is going to be adding to inflationary pressures. So and when inflation is high, what will the central bank do? They hike interest rates, and investors look for interest. Gold is a non-yielding asset, so it's context. That's the reason why XAU is falling. Simple. So all you just need to do is come to the chart with your technical strategy, look for selling opportunities, period. So that is the reason why XAU is falling. So you can understanding of fundamentals, context matter. And when you look at my currency scorecard, you can see where dollar is placed. Okay, you can see where dollar is placed. And when you look at it on the chart, okay, very soon I'm going to be providing maybe an Excel of macroeconomic analysis of commodities, because they move differently. You need to look at the supply and demand. Different factors, because we are looking at agricultural commodities. A lot of factors play a role, not just in terms of its supply and demand, but you look at factors like weather as well. It can also play a role. Yeah, but I'm probably maybe going to try, within a few weeks to provide an Excel sheet on that, on a few commodities. All right. So that is simply the reason why XAUSD is pushing to the downside. Okay. And if that continues, we see more dump on SAU USD. So the next one you made mention of is Bitcoin. So let's go to Bitcoin. Now, Bitcoin as well, is a risky asset. All right. I don't expect BTC USD to push to the upside. Everything I'm anticipating on BTC USD, I've been talking about, is just a corrective structure, something similar to this. All right. Something similar to this. And that's what I'm anticipating on BTC USD, for price to push the dollar. And most likely that move has started. Okay. We could see maybe a corrective structure here downside again. They're probably going to break this low, and I've been saying it since some time. It's not a financial advice or a signal, please, but I anticipate BTC USD maybe by mid-year or towards August, September, to touch around there, maybe close to 40,000. That is very, very possible for BTC. I see it below 50K. That's what I see for BTC USD. And the current macroeconomic environment is in support of that, because the stronger USD we have, all right, the more downside we have in BTC USD. All right. The difference here why BTC USD is not falling like gold is because Bitcoin is a yielding asset. So regardless of what, investors will also see it as a yielding asset. But gold at all is not a yielding asset. That's why BTC USD is not falling the way we expect in relationship with gold. I don't know if that is understood. Hello, Kenechukwu.
Sir?
Yeah, did you understand what I just said? My explanation.
Yes,
BTC.
sir.
Okay.
Yes, sir.
Okay, good. Thank you. So, any other question? Please bring your question, please.
Hello.
Oh yeah, Tony. Yeah, I'm
Yeah,
with
good
you,
evening,
brother.
all.
Good evening.
So my question has to do with you spoke a lot about flip. It threw me off whereby you talk about some currencies like you talked about the Euro GBP, you talked about USD card, and you said something about the flip going from a negative to a positive. Can you just simplify it for me in a way I can understand better?
Okay. When you look at the flip, it's just a simple math calculation done. Flip is just when you look at you know this is just data gotten from CFTC, the Commitment of Traders. So flip is just the change in their positions every week, comparing the both currencies. All right. So it's a change in their position when you combine two currencies, giving you that currency pair. So you try to get what they're actually doing in terms of that currency. So my work is just bringing in together the eight major currencies and pairing all of them. Looking at what they are doing in individual currency, using that to with simple Excel formulas to just understand that what they are doing for each currency. That's just what Flip is all about. Then you look at what they've been doing in the previous week, moving into the new week. That's just what it's all about. Okay. Hello.
Okay, yes,
Yeah.
I got
Okay.
it. Thank
Okay.
you. Thank you. I understand. I understand. Thank you.
Okay. Good. You're welcome, brother. So, any other question, please? Okay. Any question? Okay. Now, fine. Uh, Now let's look at geopolitics. Okay. Very important. Geopolitics is very important because it's one of those factors uh affecting the financial markets this period. And that is coming from the Middle East tension. Now, uh, nothing is new again looking at the markets. What the market is actually nothing if like the heavy artillery bombshells is no longer a new thing to the market because the market is just keep on pricing in that particular thing, meaning heightened tension, crude oil prices will still stay elevated, but we don't see that kind of real push of like a kind of serious volatility to the upside. We are not seeing that. We're expecting something new. For example, the car guys land has been one of those major topics, in this tension. And America, there have been rumors, saying America is most likely going to send ground troops into Iran to probably go and seize, their nuclear, uh, you know, uh, the nuclear, weapons and nuclear enrichment and all of them. Probably either to destroy it or maybe to find a way to steal it. You know, American troops and maybe relationship with Mossad operatives from Israel. So that is the kind of thing we are anticipating, especially when it has to do with the car guys land. I want to talk about something that's probably going to have an effect on the financial market. Not actually they are seeing the nuclear weapons, but the car guys land. If Donald Trump and America goes forward to seize the car guys land, crude oil price is going to skyrocket. We could see crude oil prices, for example, Brent around 140, $150. Why? Simply because the car guys land, process about 90% of Iranian crude oil exports. That is the economic backbone. So if America moves forward to seize such an asset owned by Iran, that's going to cause a lot of panic because the market is still buying Iranian oil. And even reports are saying that Iran is even selling more oil now than even when the US placed sanctions on them normally. Because as of last week or last 2 weeks, US were discussing removing some sanctions on Iranian oil just to calm the energy market. And I believe that is what Trump is doing with some of his rhetorics currently, just to calm the oil market, saying he's not going to strike the energy facilities again, Iran is ready for talks and all of that. Yeah, Iran may be ready for talks, but at the same time, I feel maybe he's just trying to calm the markets and not wanting the market to maybe overreact. Okay, I believe that is possibly what Trump is doing. All right, he's a very smart politician, so I believe that is what he's doing. That is in terms of geopolitics. So we are looking for that story that is going to ignite the next phase of the conflict. All right, and what we are looking at something that is going to affect oil production, oil movement, shipping, oil facilities, anything that affects supply, that causes supply disruption, damages more supply. This is actually what the market is trying to pay attention to now. Because America and Israel, fighter jets throwing bombs and Iran firing missiles is no longer a new story. This is something the market has gotten used to. All right, so the market will just keep on just gradually rallying, for example, like crude oil prices. But the market is paying attention to that new something that is going to, bring a new phase in the war. Okay, that's in terms of the geopolitics. All right, and also we also look at the US China relation. All right, we are beginning to see some updates coming from there regarding their trade agreements and all of that, which is very important. All right, Trump delayed his meeting with Xi Jinping, I think to around May or something. So, but China is beginning to complain, but I don't think anything is going to be a problem till that, because every nation is actually focusing on the tension. All right, which is affecting everybody in one way or the other. So I don't think Trump is going to be very clueless or very careless unless he has something in place to be able to cushion that effect. He wouldn't want to have those kind of effects going back and forth with China like we did last year, causing some kind of price range with his tariffs. I don't think he's going to be doing that with the war going on. That is going to destroy the whole global economy completely. I don't think he's going to be doing that. So that is it. But all the same, keep an eye on these two stories. These are the two major geopolitical stories we are seeing currently. Okay. So do we have any questions so far? Again, it's 1 hour already. Hello. Okay. So in the absence of no question, please, Dr. Luke, if you are still in the meeting, I don't know if you're still in the meeting. Okay, he's not in the meeting. Okay, we have Ms. Elizabeth here. Do you have any 1 or 2 words to tell us, to tell the traders here before we round up?
Oh, not really. Good evening, everyone.
Yeah,
You have said it all. Yes, you just explained everything. It's quite clear.
Okay. Thank you very much. Thank you. You're welcome, ma'am. So thank you very much, traders, and please trade carefully and fund your account. Trade with Godo, the best broker out there. Trade with Godo. You can always refer your friends. You can always create an IB account, refer your friends, and you kind of expand your income when it comes to the financial market. You don't only earn money in the financial markets by clicking trades. There are other means you can use to earn money in the financial market. You can refer your friends who are traders, encourage them about trading. Oh yeah, Dr. Luke. Yeah, welcome back. Yeah, I was saying if you have any 1 or 2 words to tell us. Hello, Dr. Luke. Hello, Dr. Luke.
Hello,
can you
dear.
hear us? Yeah, please. Yeah, if you have 1 or 2 words to tell us, please go ahead.
Exactly. So, for the people in the room, please let us always remember that we have a broker in the state. We have a broker in the country. We have a broker here in Enugu. We are giving these services. These services is being provided by Godo Capital Market for free, and we have more. We have more in stock for traders in Enugu. We have more for traders in Nigeria. And please, I would like us, those that have been joining this for over 1 month now, if you know you've been contacted maybe via WhatsApp or Telegram, do well to let's establish a more cordial relationship. Wherever you're, in fact, please, those on the call, can you tell us where you are streaming from? Those on this call, can you tell us where you're streaming from? just put on the chat where you are joining from, or you can unmute yourself and just announce where you are where you're joining from. This will help us. This will help us engage you more, and you start. Okay. Okay. Enugu translate. Okay. Oh, Anthony in Enugu. Wonderful. You know our okay, Enugu too. Okay, Abani Road. Good. Okay, I think you see most of us in Enugu here. Good. In the coming week, please, I want to give us a charge. Do well to visit our office at number 56 Mbanefo Street. Yes, okay, yes, I know that. Okay, Tony. Yeah. Okay. Yeah, please do well, this coming week, join. Come around. Let us discuss some kind of business. Tune in to you too, just do come around so we can discuss you know, which day and time. Yeah, you can Tony, you can come into the office on Monday. You can come on Monday. From 10 a.m. we can receive visitors. Our office opens 8 a.m. So 10 a.m. between 10 to 5 p.m. you can visit. You can visit so we can discuss way out. We have so much to do. We have so much to plan. So please, those on the call, if you are on any of our WhatsApp group, maybe the beginners class group or any group, just do well to reach out to your relationship managers. Let us know what we can do together. So even if you not funded the account, even if you don't funded the account, but you at least you know what it means to create an account. Just come around. Let us discuss. Thank you so much. Evangelist, thank you so much for.
Yeah, thank you very much, Dr. Luke.
I wish you guys the best of the weekend. I think let me put up for those on the call. Let me put up my WhatsApp number here so you can as well reach out. So if you have anything, maybe you want us to discuss, you can do well to contact our office number. This office number I'll put up here now. So that we can have a better way to serve you and serve the state. Thank you so much. Everything is carry on. I will put up.
Yeah, we are done. Yeah.
Okay.
Thank you very much, guys. And like I said, I was saying before, treat carefully, apply responsibility, stop loss, and wishing everybody a profitable training week. So the webinar is also going to be posted on our YouTube handle at Godo Africa. Go to our YouTube handle. I think on Monday, you're going to be seeing it on our YouTube handle. Okay. So thank you very much, guys, and see you this time next week. Bye for now.